Okay, hi everyone. How are you doing? My name is Xerxes. Sometimes friends call me X, and most oftentimes they also call me Hershey. And today, our topic is about mutual funds or UITF. They're just actually the same. And hopefully, you're doing fine right now. I know that we are advised to stay home for the quarantine period, and I think we are already on our third week here in Cebu City. And this is also the first, or this is today is Holy Monday. So if you're a Catholic, in the observance of Holy Week, today is Holy Monday. So I'm just doing this webinar for free. I normally charge for a certain fee with my consultations in terms of uh, the different forms of investment. So previously I had a webinar about stock market investing, and this time I have mutual funds or UITF. Okay, so hopefully the video is okay. If you could see me, just let me know. If you could hear me, just let me know. And we'll just make use of our time to be very productive. So it's good that we need to learn new skills, new knowledge. I help about investing. So maybe after the quarantine period, you could actually think of realizing what you've learned through the quarantine period. Okay, so let me just share to you my screen because we're gonna talk about mutual funds. Okay, so here it is. Let me just scroll up. So before I start, um, you will only invest something or you invest your money once you have already secured the first step that you need to secure. According to the 6 steps in building a solid financial foundation, the first thing that you need to secure is, of course, your health insurance or your health care. Next would be your life insurance for your family. Then third is if you could eliminate debts or manage your credit spending. And next is after that, whatever is left in your cash or whatever that's left in your money, then that's the money that you could actually invest, because investing takes risks. So even if you save your money in the bank or to something else, all types of investment is risky. So saving your money in the bank could sometimes also risky because the bank might go bankrupt, or it could be robbed by someone and you lose your money, right? If you save it in the bank. So any investing, all of it is risky. So I will just leave you that kind of scenario in your mind before you start investing. But it is good to invest your cash or invest your money. So today, I will be talking about mutual fund and UITF. So let us define first the terms so that it will be clear to you in your end in case you didn't know. So what is a mutual fund? It is a company that pools money from many investors and invests the money in securities such as stocks, equities, bonds, and short-term debt. And it could be, for example, an investor A, you are investor B, and then there's a certain company which is investor C, or let's add the bank as investor D. So whatever money is collected to the mutual fund provider or mutual fund company, they will assign one person for that to manage the collected money and invest it in different securities. So that's how mutual fund works. And I would advise, if you are still new in investing and if you're interested, I would advise you first to get mutual funds rather than starting yourself with stock market investing. Although in my case, in 2009, I started with both. So I got mutual fund and also started stock market investing on my own. The difference between the two, stock market is you will be the one to manage your investments. You'll be the one to transact. Whereas in mutual fund, you just need to invest your money, and then someone or the fund manager will be the one to invest it for you with the hope that it would give you higher returns with your investment. So that's just the thing. So mutual fund is the easiest as of the moment if you're trying to look for investment for opportunities. Okay, now as what I told you, there is one person who will be managing our mutual funds, and we call that a mutual fund manager. Who is a mutual fund manager? He is a professional and an expert financial analyst or investor who is responsible in investing the pooled money or the collected money to different securities that I've mentioned above. So he must be someone who is really very experienced, and he really has the knowledge in terms of investing. Okay, and let us define what is UITF. Okay, it's the same as mutual funds, but the difference is that where to get these uh, investments, but they're just the same with mutual funds. UITF stands for Unit Investment Trust Fund. So it works like the mutual funds, but instead of a mutual fund company, your money is managed by the bank. So you get UITF through the bank, okay? Mutual funds through a mutual fund provider or company. I will explain to you that one further. Mutual fund is monitored and regulated by the Securities and Exchange Commission, or SEC, just like those corporations or companies, because this is a company, the mutual fund, or it is an asset management company or provider, as we call it. Whereas UITF is monitored and regulated by the Bangko Sentral ng Pilipinas, or BSP, just like the banks are under BSP, or Bangko Sentral ng Pilipinas. So right now you already have an idea where to get. If you prefer mutual funds, then you just look for a mutual fund provider or company. And then if you want UITF, you could just simply visit the nearest bank in your area and ask about the UITF. However, there are types of mutual funds and UITF that you could actually invest. So it is good to know what are these type of mutual funds, because it will give you different returns as well. And it also depends on the type of investment or the kind of affordability that you would do. So there are actually 4 types of mutual funds or UITF. The first one is actually stock and equity funds. So the holding period for this is 5 years or more. So it's like long term. When we say holding period, it is like within that time frame, you will not withdraw or you will not terminate your investment. Instead, you have to wait for some certain periods of time for you to fully experience or gain its full potential with your investment. So for stock and equity funds, it is a bit of a high risk kind of investment because it involves long term. However, it would also give you the potential of a biggest or the highest return of your investment as well. Okay, it's riskier, but it gives you a higher return of your investment within this period, 5 years or more. Next is bond funds. Okay, that is the second type. And for those who are very conservative about their investment, this one, the holding period for this is around 1 to 3 years holding period. Okay, so it is sort of like a little bit less riskier than equity funds, because bonds have limited or lesser volatility, and it would guarantee you certain amount of, it's like fixed interest rate. So if you get a bond certificate, usually the government would issue securities and other companies as well through bonds. They would say that, okay, we will borrow money from you, and at the end of the second year or at the end of the third year, we will gonna return your investment with an interest rate of, let's say, 4%. So if you invest, let's say, 100,000, then you get 4% of it, which is 4,000 at the end of the third year. And this is this is actually less risky because, you know, in times when the company would actually dissolve itself, the first thing that they need to do is pay first all the bondholders or those who are, which they owned money, I mean, which they borrowed money first before paying the shareholders or the common shareholders. So they have to settle first their debts. So if you are a bondholder, then you will be the first one or the priority. So that's why it's less risky compared to the equity funds. The next type of mutual fund is balance funds. So just like the term balance, so it could be invested in both securities and in both bonds. Okay, so it is both. So whatever happens to, if the bonds is performing, then, and in the event that the stock market is not doing well, just like now, so at least you have a balanced fund of investment. So, you know, you cannot, your investment is also diverse. So you get both worlds, the best of both worlds. Okay, and the holding period for that is 3 to 5 years. So it's a little bit high risk compared to bonds and a little bit less risky compared to the equity funds. It's in between because the holding period is within 3 to 5 years only. So that is balanced funds. Now, if you want something short term, there is what you call money market funds, and the holding period is like 1 year or less. So these are just short-term debts issued by companies or the government. So let's say in 6 months, they would pay you for your certain investments. It's less than 1 year. However, it's less risky, but the rate of return is actually very minimal. So if you just want to test the waters and how to like experience and how is investing in mutual fund go, then money market would be your choice. Okay. And I hope I'm very clear on that explanation. So you have 4 types of mutual funds. However, in my case, as a suggestion for beginners, if you're really interested and if you want to really start investing in mutual funds, I would suggest equity funds. Okay. And set your investing period at least 5 years or even more to get the full potential of your investment. Why would you say like it's high in risk? Okay, but for me, in my experience, you go all the way if you want to get better returns for investment. That's the point, right? You want to generate more money, more income out from your investment. So go for the equity funds if you're a beginner. But again, you're not just limited to equity funds because you have 4. So it depends on what you really wanted. So if you want to be very conservative, go to bonds, or a little bit moderate or conservative, you may go to money markets. And if you want to be, you know, less conservative in terms of the investment, you go for equity funds. So if you were gonna ask me which one will I choose between mutual funds or UITF, I would personally choose mutual funds. But if you're just familiar with the bank, then nothing will stop you from investing in the bank. Okay, so you could get UITF if you are just familiar with how the banks work, and if you know you live in a nearby bank. So that could be your option. But for my personal choice, I would choose mutual funds. Why mutual funds? I have some reasons why. First is taxes are not applied in your capital gains. So whatever profit that you have, it's tax-free. And most mutual fund providers have the potential to provide dividends and offer some shareholder rights. So that's also one way of earning. So just like in the stock market, another way to earn from your investment is through dividends, cash dividends, or stock rights, which is the issued shares of stocks. So you will have an additional ownership as well. So that's the beauty of it. Another one is what I like is reports are more transparent and it has a higher level of accountability overall compared to UITF. And since I really wanted to check on reports, so I need full disclosure because that is also one way for me to determine how would my investment go in the future. And that's the reason why that I have to really check on reports. I have to check on the historical data, because mutual fund companies are required to fully disclose their investments, and yeah, like whatever reports that they need to know, that we need to know as shareholders. So that's the reason why that I would personally prefer mutual funds. But it's really up to you guys. You could go to the bank, UITF, and you could simply ask a report from the bank as well. So nothing could stop you. I'm just presenting to you your choices. So the question is, once you have already, what do you call this? You have already made up your mind about mutual funds or UITF, choosing between the two. For mutual funds, you inquire and apply this first an account in various asset management companies or mutual fund providers in our country. For UITF, of course, again, you have to go to the bank. So how much is the initial investment? Before, the initial investment for mutual funds is 5,000, minimum of 1,000. But right now, the initial would be 1,000, and the minimum additional investment is 500. It depends on different companies, on various companies. It varies actually, but to give you an idea, 1,000. Same with UITF. Before it's 10,000, but right now some banks are offering it at 1,000 in the minimum. So where to check the list of mutual fund providers in the Philippines if you are interested with mutual funds? Now, I could share to you a link. Okay, let me just pull up my website. Okay. So you go to pse.com.ph, just like in the stock market before I showed in the previous webinar. And in the sidebar here, okay, you go to market information and then click on funds. And there you go. You will see all the listed lists or companies that provides mutual funds. So it is labeled. So balanced funds, if you could see here, 17 companies or 17 products that you could choose. For bond funds, you could also hear where there is first Metro Save and Learn, Phil Bonds, Sun Life, Soldivo. For equity funds, there is also here that you could select. This is new feeder funds. There's also group index funds, and there's also money market funds if you wish like an investment for less than a year. Then there are like 5 items that you could choose. So this is where you check on the list if you're interested with mutual funds. Now, what is my personal choice? Okay, since I mentioned to you that I promote, or I would suggest mutual funds, the equity funds. So let me show you what is my personal choice. Okay, so let me pull up my sheets here, share my screen to you. Okay, so Phil Equity Fund, you could actually take notes. I got Phil Equity Fund at 20, currently it's around 26 pesos net asset value per share. Okay, and before in 2009 I got this at 10 pesos each. So doing the math, I have a profit of 16 pesos per share. So multiply it with how many shares I have with Phil Equity. That is how my money grows through time. Okay, since it's 2009, so I have this investment more than 10 years already. Okay, so that is the profit. I'm giving you a profit of, what do you call this, an idea, that is your earning. In 2009 as well, I also got First Metro Save and Learn Equity Fund, and currently it's at 3.89 net asset value per share, but I bought it in 2009 at around 1 peso. So I have around 2.89 of profit as of this current time. So Divo Strategic Growth Equity Fund, I just got it like around 2014, a few years ago. And currently it's around 0.55 net asset value per share. However, I got this around 0.89, almost 1 peso. So right now it's kind of like a little bit, what do you call this? A bit of a loss, but I don't need to be worried because I might purchase more of it because it's cheaper at this current moment. So that's okay because we have a diversified investment of mutual funds. I'm not just getting one mutual fund in one company. I'm actually getting a number of companies. So I'm spreading all my investments. So in case of Divo is not performing, at least my other investments are also performing well. So that will not hurt much on my investment. So that is one trick or one strategy that you could apply when you're investing. Okay, so I've been investing in mutual funds. I also have the stock market. I also have insurances. I also have from the real estate. So my investment is actually diverse. The next one is PAMI Equity Index Fund. Okay, I got it around 35. Oh no, I got it around 32, I guess, per share before around 2015, 4 years ago. I mean, 5 years ago. But right now it's around 35.76. So the growth is not really that much of a significant, significant amount. It's just like around 2 pesos, but hey, it's still a profit. It's still a gain, right? Now I have one bond fund, which is from PhilAm bond fund. So I got this around I guess mga 3 pesos in 2015 as well. But this is bond fund. So, well, I got equity funds, but I also have got one bond fund. So I just tried it. So right now it's around 4.34 net asset value per share. So not good. I mean, not bad. So these are my personal choices so far. So it's really up to you guys. You could take notes of this. Maybe you wanted to have something like this as well in the future. So how do we start investing? As what I've told you before, you could actually, right now, at the comforts of your home, you could check on the websites. You could actually apply through the website online and submit your requirements, and that's it. You will have, that's the first step, sending in your application. So let me just share you my screen. Let's go to Phil Equity. Okay. Since I mentioned Phil Equity is one of my favorite, hold on. Okay, Phil Equity. So this is the website, guys. It's philequity.net. So take note of that. So you just need to go to here at the sidebar. There is like procedures on how to actually start with the investment. So everything is laid out, so it's easy. So just follow the instructions that you might be required to submit or download a form and submit your identification cards. So just follow it. Okay, the instructions are here in terms of the account openings. It's very easy. Okay, and Phil Equity, guys, is my favorite mutual fund provider or asset management company. And if you could go to their website as well in the sidebar, all of the products are listed in terms of the current market prices as well, or the net asset value per share. So if you choose Phil Equity Fund, it's currently around 26.71. If you want the bond fund on peso, it's currently around 3.77. And they also disclose all of the reports in here that you could check. So that's the reason why that I love mutual funds, because all the significant information that you might need is on their website, or they are providing it, so that it could give you an idea, your strategy, and how to really start with your investment. Next is First Metro. I have this in 2009 as well. So there is a website. Okay, you just click here on the side, on the top right. You see there, open a new account. You just click on that, and it would give you what do you call this, a list and an idea on how to open an account with FAMI. Okay, so just I choose individual. Let us just check on this. Oh, I guess I have a time limit already. So there you go. For bond funds, you could visit philumfunds.com. Okay. And for Soldivo, you could visit invest.rapver.com.soldivo at HTML, and everything is there. Okay, so hi Shira. Okay. I think Shira joined late, but it's okay. Uh, let me just wait. Share to you my other screen. Okay, what is the best in case you want UITF? So what is the best UITF as of 2019? China Bank Corporation for equity fund. There's also BPI, Asset Management and Trust Corporation, equity fund, and there's also Security Bank Corporation. So these are the top 3 UITF or banks where you could get UITF. So take note of that. So I would also suggest you for further reading in my website. It's www.herjikizes.me. Just click on the link. I could provide you with the link actually. I've written a lot of articles and a lot of blogs about it on my website, my personal website. So I've written a lot of articles about investing, about mutual funds, and a lot of passive income opportunities for you to take. And well, hold on. Let me just move my screen. So it's Hershey Kisses. I have everything here. It's quite long, but it's very detailed so that everything that you need is here that you could read. So the title is Kaiser International and Kaiser Medical Center. You could search that on the blog if you happen to go to my blog, which is hershikizes.me. Okay, hershikizes.me, and look for that article. I have lots of articles about investments, so do not worry about that. Okay. So I guess we're about to end. So if you have any message, do let me know. Some of the participants came late. But anyway, let me know if you have any questions. You could use the chat feature on this webinar, and I'll be happy to answer you as well. Let me just check. Okay, so let me just pull out we have like about 30 minutes. I mean, 10 minutes more. So you just play around with Phil Equity, guys, and try to check each. So you have here the latest updates. So this is as of today, April 6th. And these are the current market prices of each company. You can refer here, as well as its historical data. So it's very easy. And for if you want to apply, just visit this website. So if you have any questions right now or later, you could actually message me on my social media accounts, and I will be happy to assist you. You could actually check on my Facebook page, World Financial Freedom. Just search for that on Facebook. I am posting different kinds of investments and strategies and techniques and other information that could help you with your investing. Okay. So what else? Let me just say hi. Wait, hold on. So I guess that's it, guys. So thanks for watching and thanks for listening. And see you next time in my next free webinar. Bye.